Hey guys, welcome to the mortgage rate forecast with Scott Criss, your mortgage rates and news. It is February 15th, and you know what? Let's go start with the charts. We're maintaining this downward trading channel. So mortgage-backed securities, mortgage bonds are selling off, continuing to sell off. We opened low today with a little bit of an upswing, but really not enough to break this channel. So we're seeing interest rates, fees for interest rates continue to rise throughout the U.S. We're currently trading at 102.23 this morning. And I know you're going to say, Scott, I watched your last video. How the heck could we be trading at 102 when we were under $100? Well, we had to change our coupon. So we're now tracking the 4.0 coupon instead of the 3.5 coupon. So this is why we're going to see kind of a shift in dollar amounts, okay? But here's what we got. If you look at this downward trading channel, it's still very well defined. There's really nothing coming out in the news right now for us to break it. Now, this is not going to be this gloom and doom where it's like, oh my God, it's going to consistently do this forever. No, it's not going to do that. We are going to find support. I don't know if we're necessarily going to jump back up to where we were anytime soon, but I think we will find support and we'll start to see it kind of level off, and then we'll see more consistent interest rates. But for now, we are maintaining a downward trading channel, bringing with it higher rates, higher fees. So currently the support levels are about 101.56 and 101.20. So 101.20 is way down here. 101.56 is right around right here where this blue line is. So that is our support. Now our resistance is quite a ways above us at 103. So we have this huge trading range. However, guys, if you really look at this channel though, I mean, the channel is so well defined. One could assume that we're going to maintain this trading channel. So this is why I'm saying 102.50 is really our resistance, not 103. And that's just because of just the trading patterns. So here's what we have. Open low today, but jobless claims came out. Helpful for bonds. Not a lot, but helpful. Empire Manufacturing, New York State Index, the Housing Index came out. All of these pretty helpful for bonds. Industrial production, but that PPI in the Philadelphia Fed, not so good for bonds. So it was a lot of reports today, but really a mixed bag. So, but all in all, guys, there wasn't enough good reports for bonds for us to break out of this downward trading channel. So stocks are higher, bonds are higher, which is kind of unique because we've seen sell off on both recently. So let's quantify where we're at. Freddie Mac reported on January 18 that finally came out, guys, 4.03 at 0.5 points. So if we were trading about 103.65 and now we're trading at about 102.23, that's $1.42 worse. So if the average consumer is paying around half a point, now they're paying closer to 2 for that same rate. So we are still continuing to see that downward trading channel. Sorry, I keep saying that, but it's true. So as far as the last projection, it was a hit. Now, I projected as low as 99.50, came in at 99.56. So, and that's on the 3.5 coupon. Now, as far as short term, the analysts have been a little bit inconsistent. Some of the analysts, which I really respect, are kind of neutral on it and saying, hey, if you float, just float really carefully, but I really don't see us breaking this downward trading channel unless some significant news comes out. Other analysts are very bearish still. But the long term, 30 plus days, I think it's fair to say that most analysts are really bearish, and they think bonds will continue to sell down, bringing with it higher interest rates, higher fees. So my forecast for through next Thursday is 102.12 to 101.70. That's a fee swing of about 11 cents to 53 cents worse. So my bias is to lock still. There's just nothing out there that's really saying, hey, it's worth the gamble. So that's where we're at. But hey, hit me up with questions. I answer all my questions, answer all the comments. Leave those comments down below. Hit that like button before you go. Everything likes to be liked, so does this video. If you want to subscribe, click the guy at the top left. You'll just get a little notification when we release new content. And if none of this really made sense to you, but you're trying to learn, and you're like, hey, I just want to pick the best time to lock in, and just make good financial decisions. Top right, click Bonds 101. And that will teach you the basics that you need to know on how the bond market works and how it impacts you as the consumer when you're trying to get a good interest rate. Anyway, that's it for this week. We'll see you next Thursday. Have a great day, guys. Bye-bye.